Good morning, fellow traders from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM, and HFM is your number one broker linking you to financial assets in the global markets. Now, we will begin with our usual standard procedure of going into fundamental analysis to look at short-term, medium-term, and long-term market direction based on socio-political and geopolitical forces, in short, economic data and what is happening in the world, which is affecting the movement of price. Then we'll go to technical analysis to actually see it play out, and we will proceed from then to trade from our accounts and take advantage of those that information to get the opportunities provided therein. Before I proceed, I would like to bring to your attention that this is going to be a pre-recorded YouTube video, to mean that you can find this video later and rewatch it among other content on our HFM YouTube channel at HFM Kenya. Kindly visit our YouTube channel at HFM Kenya, click subscribe, click on the notification button, and share, like, and also comment so that we improve our algorithms to enable you to enable this information to reach more and more people by bridging the education gap. Having said that, we move swiftly to see the charts, economic calendar, and to the attention of those who would be asking, where can I find the economic calendar? You can visit the HFM.com website at just hfm.com and go to the trading tools and education, and you're going to see trading calculator here, which is good for risk management, and you will also be able to see economic calendar all in one package. So when you click on the economic calendar, it's going to portray the news, as you guys can see right now. So we have times without number mentioned that to understand economic data quite easily, it's important to know that it has two segments. There is the labor data and there is the inflation data. We know that the labor data tends to inform NFP, which the labor data involves the job markets, how many people are getting employed. When we see many people getting employed, we know the economy is doing good, so we invest in various assets in relation to that information. If the economy is doing good, depending on the asset, if it is a currency, so the US dollar being the quote currency or the second currency, we sell, look for selling opportunity. If it is the US dollar coming first in the currency pair, we buy, right? For stocks also, which tend to be affected in that regard, and also commodities, with a little bit of caveat with commodities, to mean with commodities, you interpret them both with economic data and also geopolitical events keenly. Okay, geopolitical events to mean what is happening to the world, which part of the world is in chaos, are there conflicts, is there peace, all right? And commodities here, I'm talking about majorly oil or gas and gold for the gold traders. So moving on swiftly, we had the non-farmers payroll coming out on Friday, and as we had said on Friday during this series of the daily morning market call, when it would come out positive, it would give us a clear indication that the US dollar is doing strong, is doing better, and we would know on how to interpret that on the charts. So we had the NFP coming out strong, which is higher than expected at 12,000 from what was anticipated, what they expected at 160K. So we see a 90,000 plus increase in jobs from what was expected. At 256K, beg your pardon, the expected was 160K and what came in is 256. So to not let you confused, we see an hike in increase of jobs up to 90K, and which is higher also than the previous 212K, which came out in the month of November, right? So in the month of December, we have had more people getting employed despite being in a festive season in the United States. Very nice. Quite unusual, but very nice, because we know how to interpret this data, right? As we move on to this week, which we have quite a number of news coming out. Just a minute. On Tuesday, we have PPI, Producer Price Index, which is an inflation data which tells us the price of producing items in the United States, which on Thursday we are going also to see. On Wednesday, we are going also to see we have CPI. So that is in for the week. We have two major news coming out. We have PPI and CPI. But before that, we know that we have just had NFP. Let's see its effect. And subsequently, into the week, we are going to have conversations on this series of the Daily Morning Market Call on various news coming out in the week, that is PPI and CPI, and the effects of this in the market. Very nice, very nice. So we proceed. Share the charts. Very nice. So we are going to see quite a unique phenomenon here as we look into our usual suspects before everyone dives into trade, before London session gets in quite actively. It has just opened at 10 a.m. East African time. So moving on swiftly, for US dollar quote currencies, or the US dollar coming in second, we shall see that we are going to be experiencing much more of a bearish momentum. So we are looking for sales, and then for US dollar quote base currencies, the US dollar coming first, we will see clearly that it's printing price to the upside, and we know what to do when that happens. And when we see price going up, we get in for buys. All right, we anticipate it's going to go higher based on fundamental analysis and technical analysis for entry. When we see trend or price moving down, a downtrend, we look for sales. So for USD, Euro USD from the daily time frame, we see we broke out the low that we spoke about on Friday, and price is printing much more to the downside. So we know we are overall in a downward trend. And for those who like to actively indulge into the financial markets, you will notice on every series of the Daily Morning Market Call, there are various tips that we bring forth that you can use to your advantage, because I remember us talking about testing of this area and price going to the downside, and you see that is what actually happened. Not to put it, kindly mute John, not to put it, no, to put it simply, right, and not to put it complicated, trading is quite easy when you follow the trend and market structure. Simple, right? I know there's various information outside there, but keep your trading as simple as possible to shorten your learning curve and take advantage of the opportunities in the financial market, which will print out possible profits, right? If you go to our time frame, we see that price is also printing to the downside. I'd like to zoom out a little bit to see it clearly. We are taking out the lows. We want to see more lows being taken out, right, for us to continue taking selling, right? We might experience slight pullbacks into areas of interest. For example, we might experience price printing to premium in areas of interest and then shortening. All you need to know is we're in a downward, we're in a bearish market, so you're looking for sell opportunities at areas of interest. The reason I've drawn this as the area of interest, because you could see candlesticks resisting to print above this point here, right? right? So going to GBP USD from a daily time frame, also we see it breaking the key level at 1.22500 and price printing even much more lower. If you go to the 1 hour time frame to see it clearly, we see what is happening. We wait for pullback in areas of interest and we continue getting it for sales. For those of you already in for sales, would possibly consider adding more positions so as to leverage on the trend and also to experience much more possible profit. For Euro USD, for AUD USD, or the AUD if you may like, the Australian dollar against the US dollar, we also printing price to the downside. So we see for Euro USD, GBP USD, and AUD USD, they are positively correlated to mean they tend to move in a similar fashion, to mean if they tend to move in one direction. So it's quite easy to interpret them in together. For USD based currencies, or the USD coming in fast, what will we be looking for? We will be looking for the reflection of fundamental analysis by price price to the upside. So taking out the highs and price printing to the upside. Right here, we took out the high. As we spoke about the previous week, for those who got in for the buys, are experiencing quite a good time. So we want to see price taking out highs for us to continue adding more positions or getting in for the buys, for possible buys. Right? For USD JPY, we are experiencing some sort of consolidation. But wait a minute, if we would draw in here, in a lower time frame, this is the 1 hour time frame, this is the daily time frame. Let's go to 1 hour time frame to see what is happening. Very nice. Would wait to see the highs being broken for it to confirm the bias of fundamental analysis, which we know we have a strong US dollar, and for us to possibly get in, continue getting in for buy position. A scenario that we are likely to see also in USD CAD, prices printed to the upside, reacted from this area that we spoke about the previous week. Prices printing out to the upside. We want to see it take out the highs, and if I go to lower time frames, we see it is taking out the high. We wait for candle confirmation when by closing above the highs for us to continue riding on the overall trend. For cross pair GBP JPY, we see that price is coming back to retest this trend line. Would be much more cautious here. The reason for this is this low here did not do its job by taking out this high. So we seem to have some sort of resistance up here. We want to see it being broken above to confirm, right? And if we get in for sales, we want to see this low being taken out, and possibly even this further low, significant low, being taken out for us to continue considering to get in for the sales, right? So generally speaking, for the currencies that I've spoken about, we have observed that we are following market structure. Is the market printing higher highs and lower highs? So that is an uptrend. So I'm looking for buy opportunities. Why am I looking for buy opportunities? That is for US dollar based currencies. It's because the US dollar is strong and it's coming in fast, and I'm following the trend. You see there, we see a unique scenario of amalgamating or marrying, putting together fundamental analysis and technical analysis. Very nice, very nice. For commodities like gold, now I got a funny, quite a rather interesting question in the morning, which I have occasionally gotten to be asked is, why is gold disobeying fundamental analysis, right? Why do we see gold printing to the upside or being in an uptrend, and yet we know the US dollar is strong, and it is the quote symbol in the gold, which gold is XAU USD, so we see gold coming in second. But why is it not obeying fundamental analysis religiously or seeming to obey fundamental analysis to some level as compared to the currencies. Now, for commodities, it is important to note that commodities are tangible items of value which tend to be affected by both economic data, yes, and also it tends to be affected by geopolitical events. And by geopolitical events, I mean what is happening in the world. Do we have escalations? Do we have wars? Do we have trade wars? Right? Because we know commodities are tangible items which can be actually traded, right? In which and are largely affected by happenings in the world. And uniquely, we see that oil and gold continue being in a bullish trend. The demand of these commodities is because we see that the sanctions being imposed on Russia by the United States, that of course through the United Nations, are causing the demand of these commodities to go up because it's sending fears and shivers. That is for gold. And for oil, it would be attributed to the reason of cutting of supply chains. And from Russia, we know that Russia produces gas, and they are one of the biggest markets which they transport using pipelines is Western Europe through Ukraine, the same country that they're in conflict with. So the president of Ukraine, that is President Zelensky, we see him cancelling out the contract that they had of passing oil through Ukraine to Western Europe. This is going to cause a surge or a shortage in oil, and we will see price printing to the upside. On the other side also, the opening of these sanctions would also affect gold in the sense that we see fear being injected into the market. When you see fear being injected to the market, investors would rather have their money in something that has shown consistency over time as a store of wealth, and that is gold, right? But we don't enter again anywhere. We look for areas of interest, which are as a result of a trend. When the highs continue being taken out, we know we are going in for buys. When the highs, for example, at the 26.97, which is the all-time high, once it's been taken out, we know we are going in for buys. When the lows are taken out, we know that we are going in for sell. So, with that in mind, I would like to bring it to your attention that as a disclaimer, this is not by any chance financial advice. This is meant purely for information purposes. Remember to use risk management and do your due diligence. Use risk management and do your due diligence for one purposeful reason, so that you get more profits than losses, right? And you're able to achieve this by observing risk management and, of course, having a recommended risk to reward, which is a minimum of 1:2, to mean if you risk a certain amount, when you win double the amount. And for you to get much information or get put in the loop for you to participate in the financial markets, kindly visit the hfm.com, register for an account. It's quite easy there. If you find it hard, just go to HFM YouTube channel at HFM Kenya. On the videos on how to, you will see on how to do it easily. Then go to hfm.com, register for an account, and one of our experienced experts is going to contact you to help you navigate the process from there, and we can all have a wonderful 2025. Remember, guys, we experienced a drastic market movement when Trump took over office. That is 4 years ago, at 2016, 4 years from then to 2020, 2021, thereabout. And we experienced this because his policies are quite informative diplomatically, which moves the market quite faster. So the prediction would be in the next 4 years, we will see so many opportunities, right? With that said, meet you here tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, my name is Kefa Eric. Cheers and God bless.